It's business time now here on Live from Paris with Stephen Carroll. Good morning, Stephen.
Hi, Catherine.
We're going to start off with Greece, the debt dilemma. No agreement on Monday at the eurozone finance ministers' meeting.
No, the positions are still quite far apart between the two sides here. Greece, first of all, what they're looking for is what they're calling a bridge deal. This is an interim financing arrangement that's going to involve not necessarily a new loan from their bailout partners, but just essentially tinkering with the financial instruments to give them enough money to give them a couple of months to renegotiate the bigger issue, which is what they do with their long-term debt and how the austerity measures are going to pan out. So that's what they want. The Eurogroup aren't in favour of that as a rule. They're not into the sort of bridging arrangements. What they want to offer is an extension of the current bailout, more time for Greece to be able to renegotiate a new deal, but that would mean they would have to continue to carry out the reforms, which of course essentially austerity measures, which the Syriza government had rejected and were elected on the back of rejecting those measures. Now, the Eurogroup president did kind of focus on this idea of extending the bailout deal. That's certainly what they want. He did say that Europe would allow some flexibility with some conditions. Let's listen to the Eurogroup chairman, Jeroen Dijsselbloem.
We stand ready to work with the Greeks. We think that the best way forward is to get an extension of the current programme. Once we have that, which would require, of course, the commitments also of the Greeks that they are serious about this. And once we have that, we can then talk, or they can talk with the institutions on the flexibility, how to change it, make changes within the programme. That still is our preferred option.
All right, so far so good, or so bad, perhaps. What happens next?
Well, the timeline is becoming quite crucial here now. Jeroen Dijsselbloem says they only have this week to come up with a deal. That's because any deal to alter Greece's bailout would have to be approved by the national parliaments in the eurozone. That would take time, and that February 28th deadline is looming. So Jeroen Dijsselbloem said they could call another emergency Eurogroup meeting by the end of this week if they needed to. On top of that, we have the European Central Bank meeting tomorrow. They're going to be making a decision on the emergency financing for Greek banks. If they were to change their position, that could put Greece in immediately a very difficult position where they may not be able to support their banks as they are at the moment. The Greek Finance Minister, Yanis Varoufakis, for his part, has said that he's not opposed to an extension of the bailout deal, but the conditions, the devil is in the detail here. The conditions under which that extension would be granted would have to exclude certain reforms that they don't want to implement, the Syriza government doesn't want to implement. They've shown they're not going to give up easily. If we want to paraphrase Charlene Spiteri, they can say what they want, but it won't change their feelings.
Indeed.
But they do. We have been hearing from Yanis Varoufakis again this morning. Let's listen to what he had to say about this.
Well, the next step is the responsible step. Europe will continue to deliberate in order to enhance the chances of, and actually achieve, a very good outcome for the average European. Not for the average Greek, not for the average Dutch person or the average German. We know in Europe how to deliberate in such a way as to create a very good solution, an honourable solution, out of initial disagreements.
Yanis Varoufakis, Greek finance minister, almost sounding like he's trying to hypnotise Europe into agreeing to the deal that he wants there. I mean, he sounds almost confident that this deal is going to come. What happens if it doesn't?
The commentary has been very interesting, actually, from Yanis Varoufakis. He said at some point during his press conference yesterday, Europe always comes up with a solution at the last minute. And
very casual.
He's not wrong. From a Eurozone point of view, there is at least a sense that a compromise could be possible now, even though it does seem quite far away at this point. The alternatives aren't great. We've heard from the Greek defence minister in recent days. He was saying they could look elsewhere for money. Russia and China being mentioned, both of those quite unlikely options. The other, of course, option would be the nuclear one, that Greece would end up without external funding, unable to pay its bills, its banks unable to support themselves. That looks like a Greek exit. We're not there yet, but we're not very far away from it.
OK, how are the markets taking this news or lack thereof?
Well, as we can expect, the European markets have opened down at the start of trading today in response to the breakdown of those talks. Investors worried about what's going to happen next. But as you can see, no massive sell-off on the markets. It's just that opening a little bit in negative territory. Plenty of corporate news moving those markets as well. One example, the Intercontinental Hotel Group, their shares opening down over 1% in London, despite reporting a 10% rise in profits. Over in the Asian markets, of course, they had the first reaction to this after those talks broke down. Not too worried by it. Still some gains being seen, with the exception of the Nikkei, which closed down just slightly. Let's move on now to look at some of the day's other business stories. And the French telecoms firm Orange saw profits before tax and other charges fall 2.5% last year to just over 12 billion euros. This as the company underwent a 700 million euro cost-cutting programme. Orange says it expects profits to fall further in 2015 as revenues continue to slide. Shares down 1.8% on that news. House prices in China fell by 5% over the past year. It's the biggest drop on the new home index since it was introduced in 2011. Prices fell in 64 of the 70 cities surveyed. It's seen as another indication of the slowdown in the Chinese economy. And Rolls-Royce says it hasn't been contacted by Brazilian authorities about bribery allegations from a former executive at the state oil company Petrobras. The British engineering firm was accused of paying bribes in a plea bargain statement by former manager Pedro Barusco. Rolls-Royce says it will cooperate with any inquiry and that it wouldn't tolerate improper business conduct of any sort.
Indeed. Well, thank you very much, Stephen Carroll, who always has proper business conduct for us here on Live from Paris.